You own one property, maybe two, and someone in a Facebook group just told you that if you don't have an LLC, you're basically handing your life savings to a lawsuit on a silver platter. But is that actually true? Or is the LLC gospel just another piece of landlord folklore that sounds smart at a dinner party but falls apart under a microscope? Let's start with why everyone's talking about this, because the fear is real even if it's sometimes overblown. A single slip and fall, a tenant with a grievance, or a contractor dispute can turn into a lawsuit that goes after your personal bank account, your car, your savings, everything you've worked for outside of that property. The core idea behind an LLC, a limited liability company, is simple. It's supposed to be a legal wall between you and your investment. If something goes wrong inside the LLC, creditors come after the LLC's assets, not yours personally. And that separation is called the corporate veil. Here's where it gets interesting though, because that veil is not made of steel. It's more like a shower curtain. And it only works if you treat the LLC like a real separate business. If you're mixing personal and business funds, skipping operating agreements, or just slapping a name on a filing and calling it a day, a judge can pierce the veil and come after you personally anyway. Now, on the tax side, here's the part nobody tells you at the seminar. A single member LLC is what the IRS calls a disregarded entity, which means for federal taxes, it's as if the LLC doesn't even exist. You still report everything on your personal return, so the tax benefit people promise you is more often than not completely invisible on paper. Where LLCs do shine is in liability optics and long-term structure, especially if you plan to scale. Lenders, partners, and property managers take you more seriously when you're operating as a business entity, and it forces you into better habits around bookkeeping and documentation from day one. But here's the catch. That catch is everyone getting a mortgage inside an LLC is a whole different sport. Most residential lenders won't touch an LLC purchase, which means you're often buying in your personal name and then transferring the deed, which can trigger a due on sale clause in your mortgage and make your lender very unhappy very fast. History is full of investors who formed LLCs, felt protected, and still got wiped out because the structure wasn't maintained properly. And history is equally full of investors who never formed an LLC on their first property, managed risk through umbrella insurance, and built massive portfolios without the extra overhead or complexity. Speaking of umbrella insurance, this is the misconception we need to address head on. A $1 to $2 million umbrella policy can cost you anywhere from $150 to $300 per year and gives you a serious layer of personal liability protection that most single property investors genuinely need before they need an LLC. So what's the practical takeaway here? If you own one property and you're just getting started, your energy and money might be better spent on solid insurance, a good lease, and a real estate attorney to review your documents than on an LLC you may not maintain correctly anyway. That said, if you already own the property free and clear, if you're in a high liability state, or if this is the start of a deliberate portfolio strategy, then forming an LLC from the jump makes a lot more sense. Just go in with eyes open about the financing complications and the annual fees your state will charge you to keep it active. The deeper truth here is that the LLC question isn't really about one property. It's about your risk tolerance, your exit strategy, and whether you're building a business or just holding an asset. Discipline in how you structure your investments is just as important as the deal itself. And getting the foundation right early saves you from expensive unwind costs later. At the end of the day, no single structure is magic, and the investors who win long-term aren't the ones who had the fanciest entity setup. They're the ones who stayed consistent, stayed protected, and made decisions based on their actual situation rather than fear or forum advice. Whether you end up with an LLC, an umbrella policy, or both, what matters most is that you made an informed, deliberate choice. If you're ready to take the next step, whether that's real estate investing, home contracting work, or finding the right lender, check out our links in the description below and let's get you started the right way.